Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Friday. If this is your first time seeing one of my videos, welcome to my channel where I'll try to demystify all things mortgage related. If you find this content helpful, like and subscribe. So this week in mortgage news, we had overall rates improve. It was an interesting week because the economic data was not great, but in large part due to the conflict in the Middle East between Israel and Hamas, we saw rates improve. Tuesday and Wednesday, there was no trading in the mortgage-backed security world. Monday, we saw rates improve. And on Wednesday, we actually had the PPI report come in higher than expected, which typically would lead to worsening rates. Thursday, we did have the CPI report come in hotter than expected. The headline came in 0.1% higher, core came in right as expected, and most concerning to me is shelter came in at 7.2%, which is exactly the same year over year as it was last month, year over year. If you saw my last video, I said that anything at or above 6.9% in shelter would be concerning. Anything at or below 6.8% would be good. So obviously a good bit higher than I'd hoped. Now, this could be a fluke because we did see month over month shelter go up 0.6%, whereas it had been consistently 0.3 to 0.4 for the past few months. So we very well could see it continue going back down next month. However, this is an important data point in favor of the theory that the Fed will keep rates higher for longer and that inflation will be more persistent than expected. There had been talks about that the last few weeks, but there was no real data to support that until this. Now, until next month, it's hard to say for sure whether that's going to happen. We might, like I said, this might be a fluke. We might see shelter continue plummeting down next month, but it is a data point in favor of inflation being a little stickier than anticipated. So next week, we have a couple reports. The retail sales report will come out on Tuesday and initial jobless claims on Thursday. However, I will say, based on this past week, what's happening in Israel and Palestine is it could supersede any economic events in terms of moving mortgage rates. And it goes to show that it's really impossible to predict exactly what's going to happen in any kind of market because a big economic event or a big worldwide event trumps any economic news. And in this case, it is causing uncertainty and it is increasing the likelihood that the Fed will pause rates rather than hiking them in the next couple months. So as always, if you have any questions, shoot them below, or you can call or text me on my cell phone. But thanks for tuning into this one, and I will see you next week.